In January 2025, Los Angeles suffered one of its most catastrophic disasters in history. Over 16,000 homes destroyed and tens of thousands of Angelenos displaced.
Street after street full of houses have been reduced to smoldering ash.
With some 16,000 buildings destroyed, the cost of recovery could break records.
Dozens of people had to abandon their cars in traffic jams and flee on foot as the flames bore down.
And billions on top of billions of dollars in damages. Entire communities were completely wiped out. And for many, the financial impact is just the beginning.
All right, dude. Yeah, let's get out of here.
Entire neighborhoods still burning.
There's not a single house left standing here.
And now in response, LA County has just signed into law a new eviction moratorium. If you live inside of LA and claim to have lost at least 10% of your income, rent is no longer due. In fact, it's not due until July of 2026.
The legislation calls for a moratorium on evictions for tenants affected by the fires.
Does this remind you of anything you've ever seen before? Perhaps in 2020? That lasted for over 3 years.
The LA County Board of Supervisors is extending pandemic tenant protections for 2 more months.
Homeowners and landlords saying that they're going broke and entering foreclosure.
After 3 years, certain programs will expire.
During that period, LA renters accumulated north of $1 billion in back due rent, most of which owed to mom and pop landlords who are still struggling to this day.
Many landlords say it will take them years to recover from their economic loss.
On this stretch of street off of Exposition Boulevard is lined with triplexes. I'm told that most of them are owned by small mom and pop landlords.
I don't know why people think that we have so much money. I scraped to get this building.
When evictions expired, Mayor Karen Bass brought forward more tenant protections and even declared a homelessness emergency. And numerous small mom and pop landlords that simply didn't have the financial capacity to hold on any longer had no choice but to sell. Many of them selling during the moratoriums for a lot less than what they should have gotten. This big shift allowed large corporations and bigger investors to step in and scoop up deals for a fraction of their true value.
Experts say that many of the properties bought up by institutional groups were previously owned by people who were destabilized in recent recessions.
This helped leading further rent increases and increased cost of living. With the new eviction moratorium in place, many question if Los Angeles is going to repeat the inevitable. Mom and pop landlords punished, wealthy investors and corporations to buy their properties for discounted prices. Will this policy prove to be a relief for tenants, or is this a disaster for tenants in the long term with some short-term pain to the small mom and pop property owners throughout Los Angeles County? Before we get started, today's video is sponsored by Gold Mining Inc., New York Stock Exchange ticker GLDG, but more on that in just a little bit. So what exactly is this new policy and who qualifies? Tenants who claim to have lost at least 10% of their income, although no proof is required. They say back rent won't be due for about 12 to 18 months, but if we know anything about Los Angeles, they'll set a timeline and they'll continue to move it along, just like in 2020. Every 30, 60, and 90 days, they kept kicking the can down the road.
Yeah, this moratorium is supposed to end at the end of the month.
The LA County Board of Supervisors is extending pandemic tenant protections for 2 more months.
Therefore, the burden of not paying rent has fallen on landlords.
I believe many of these landlords that have tenants that are not paying rent will have a hard time collecting. Because after all, a judgment is only as good as your ability to collect on it if you're a landlord. And if the tenant doesn't have any money, what is one to do? For many renters looking at this new moratorium, and their financial situation has likely gotten worse over the last several years, many will see this as an opportunity to catch a breather. But for landlords, especially small mom and pop landlords all throughout East LA, who have come to Los Angeles in the 70s and 80s and 90s and acquired a duplex and a triplex, and that was their retirement plan, well, 1 or 2 tenants not paying rent could really derail retirement and could alter their life forever.
She says many of her members are looking to sell and cut their losses.
Small landlords are running out of time, cash, and options.
A landlord in Merced. He is owed $17,000 in unpaid rent. He was finally forced to sell the house he was renting.
Butchers, bakers, candy makers, they're not required to give their services for free, but we were the landlords, so I'm going to be out of the landlord business.
Because after all, these landlords still have to pay property taxes, they still have to pay to upkeep and maintain the property, they still have insurance to pay, all while receiving reduced or no income from each tenant that opts in for this moratorium relief. And if these mom and pop landlords do not have the financial capacity to pay the mortgage payments themselves without that rent, well, they're going to have no choice but to sell, and they're going to be selling to the buyer that is willing to pay the most money. But with sky-high interest rates and a big question mark on what's going to be home insurance over the next couple of years, I believe many of these landlords are going to be getting less than what they could have gotten 6 months ago, a year ago, 24 months ago.
When I first bought this house, I was very excited. Then it started turning into a horror story.
Analysts write that by 2030, institutions may own 7.6 million single-family rental homes.
Givens made the decision to sell after going 11 months without being able to collect rent.
67 years old, senior citizen, disabled, and I depend on this property for income.
Looking back in history, in 2020 through 2023, this eviction moratorium was one of the strictest in all of America. If you were an investor today looking at this new moratorium that they say is going to last between 12 and 18 months, would you invest thinking that it's going to be over in 12 to 18 months, or would you bet that things are likely going to be a little more turbulent in the future than they were in the past? You probably would underwrite a lot more risk in that deal. Well, with sky-high insurance premiums, high home prices, high borrowing costs, more than likely you're going to be willing to pay a lot less for these properties, and these landlords are going to likely suffer some pretty big losses over this entire situation.
Since I made that decision to sell this property, I've had such a relief lifted off my shoulders.
Since he couldn't evict his tenants, Givens took a significant loss on the sale, $70,000 below market value.
The big concern for property owners inside of Los Angeles and for the city of Los Angeles is the direction politically that LA is going for business owners and investors, the ones that create the jobs and provide the housing. They are now saying that housing is a human right, but they go one step further. As one official said, until we can stop looking at tenants as a source of income or profit, and until we can stop looking at housing as an investment opportunity, we will always be fighting for eviction protections. But for many landlords in Los Angeles, this isn't about just an investment, it's about their livelihood, about their future, about their retirement, and about their families. With unpaid rent coming for likely many landlords, I'm talking about a year's worth of unpaid rent. If rent $2,000, $3,000, you're talking about $40,000, $50,000, $60,000, $70,000 in back rent over that 12 to 18 month period. Just the back rent, not including what property insurance will look like over the next 12 to 18 months. When they have tens of thousands of people displaced, 16,000 structures burned. Can you imagine what insurance will be like next year? It's not going up by 10, 15, 20%. We're going to see insurance go up by 30, 40, 50, 60%.
Thousands of homeowners in the LA area impacted by this week's devastating wildfires. The region is facing billions in losses.
California's largest home insurer pushing state officials for an emergency rate hike.
If you have these costs going up, the cost of utilities, maintenance, everything is going up, and then rent's getting pulled, and interest rates are staying higher for longer, it's going to be a game of survival of the fittest. Not long ago, Los Angeles was a city where every business owner wanted to put their flag in the ground. They wanted the opportunities. They wanted to hire great talent. They wanted to have an office there to show as a template of success, a sign of success. Many people, it's almost like having an office in New York. It says something about you. Well, now many of these companies are saying, I simply can't afford the exposure being associated with Los Angeles real estate.
It's not just people leaving the Golden State. More tech companies are also packing their bags and moving their headquarters to other states.
The Golden State's luster has tarnished.
Talking about big names like Oracle and Chevron, CBRE, and many other companies have packed up and left California. Even billionaires and influencers like Joe Rogan, they've all left. And they went to Texas, they went to Tennessee, Florida. They're getting out of there and going where they're going to be treated better. Even real estate mogul Rick Caruso, who built the Grove, said LA, it's a disaster. His exact words were, it's falling apart. And it's not hard to see why. Retail theft is out of control. In 2023, Target alone lost $500 million in losses just because of theft and bad policy. Nordstrom, Whole Foods, CVS, all similar situations. And they've all shut down locations in downtown LA, saying it's no longer safe to do business in California, in Los Angeles, in San Francisco, in these major hubs in California. I saw it firsthand. Last year, I went to San Francisco. I witnessed someone stealing from a CVS, and I went and asked the manager. I said, how often does this happen? And he said, well, on a bad day, 10 times, on a great day, only once. And every time that I wanted to buy anything, I had to hit the little button, and then a clerk would have to come out, they'd have to leave the front, come back, they'd have to open up the cabinet, get toothpaste, get whatever I needed. It was a $3, $4, $5 item, and they had to walk the aisles with me to get these items. So if that clerk is making $15, $18, $20 an hour, and they have to do that on every single transaction, every purchase, and CVS is only making 10, 15, 20% maximum, that's probably even high. How are they making any money? Well, they're not. I think that's why there's boarded up buildings everywhere in all the financial districts. In San Fran, LA, and a lot of the surrounding areas, they're just closing up shop. There's for lease signs everywhere. I did a video last year as well called Downtown LA is Hell. Walking around downtown LA showing what it actually looked like. And the video got 700,000, 800,000 views. Everyone was talking about just how bad that situation got over the last 36 months. On top of that, California is the most litigious state for business owners. You get sued for almost anything in California. And a lot of business owners look at the exposure, not just in the real estate side, but also hiring. California is the most beautiful state in the country. I love California. I think it's incredible. I think what they're doing to it is a sin. It is tragic to witness this downfall. It almost looks like it's an orchestrated collapse of California. I hope one day it all changes and we get to see and live in the 2019 version of California, where everyone wanted to go there. Businesses wanted to open up shop there. People wanted to invest their money. Now California's chasing money out of the state, all with their horrible, horrible policies. With crime skyrocketing and the cost of living getting out of control in California, additional policies like eviction moratoriums, that's not going to help a tenant. In fact, it's going to backfire in my belief. I think what will likely happen is in 6 months and 12 months, some of these tenants that are not paying might think, hey, this is a great situation. But then, as that mom and pop landlord struggles, a larger corporation will step in and acquire that property. A non-profit will step in and buy that property. Or maybe even the state of California. And they'll say, look, we're going to provide affordable housing. This is going to be a great situation. Well, if people want to be renters for life, that could be a situation that might work out. But if you have ambition and you want to own your own home, own your own property, be able to pass that property on to your son, daughter, mother, father, you want to build some wealth for yourself, it's going to get harder and harder to do so. And the incentives are going to be reduced and removed from the equation in LA. It's a tragic situation. What we're witnessing right now, and I said this in 2020 and 2021, this is not the end, this is the beginning. I sold my property in LA in 2021. Right as I said that, I'm like, this situation is going to get worse. And those moratoriums stayed intact for 2 more years, and now they're back. I'm telling you, I think the situation is going to get a lot worse unless people do something. And I don't think they're going to. I think if they were, that would have happened years ago. I think things are just going to continue to erode in California for mom and pop investors. Now, I'm not saying California, it's going to be very, very, it's impossible to get ahead in California in real estate. I'm not saying that at all. But I'm saying in a lot of facets of real estate, like office, I wouldn't want to own office right now, or at least buy office at these rates. I think you're going to see delinquencies continue to increase as more and more businesses leave. I think retail is going to struggle. I think mom and pop landlords are going to struggle. I think a lot more inventory is going to hit the market. You got 2.7 trillion in multifamily and commercial debt that needs to roll over the next 2 years, 800 billion just this year alone. So a lot of pain and pressure is coming on the back of high insurance rates and challenging landlord-tenant law. So I think there is ways in which you can make money in real estate in California, but I think there's a lot more ways in which you can lose money. You want to be very, very careful right now. It's one of the main reasons that I'm investing right now in Ohio. It's risk and reward. The risk is very low and the reward is very high. But in Los Angeles and for renters, this offers a unique opportunity because they're looking at sky-high cost of living. Their car insurance, food prices, everything is going up. The labor market's struggling. They're looking for relief. And since they don't have to prove financial loss, well, things get a lot easier for them to say, you know what, screw the property owner. They can hold on. They're rich. They're a millionaire. They own this property in LA. I can barely pay my gas bill or my utility bill. I'm going to stop paying and I'm going to save up money so I can get ahead myself. With all the economic uncertainty, landlords struggling and businesses shutting down, and inflation eating away at savings, people are looking for ways to grow and protect their wealth. And historically, when instability rises and inflation rises, gold tends to follow. Gold just hit $2,900 per ounce, breaking all-time highs in USD, EUR, GBP, JPY, CNY, AUD, and CAD. Yet gold stock prices have not caught up. The GDXJ index, which tracks junior gold miners, is down 66% from its 2021 peak, even though gold is 50% higher today. Enter Gold Mining Inc., New York Stock Exchange ticker GLDG. The sponsor of today's video. Gold Mining Inc. is trading near 5-year lows, despite owning dozens of gold projects, with 12.5 million ounces in measured and indicated resources, and 9.7 million ounces of inferred resources. Here's why this looks promising. Gold Mining Inc.'s market cap is just $155 million, yet its cash and equity holdings alone total $145 million. The dozen gold projects were acquired from companies with peak valuations of $850 million between 2010 and 2012. Gold hit $2,000 an ounce in 2020, and GLDG soared to $2.72 a share. Today, gold is near $3,000 an ounce, but GLDG is down 68%. Gold Mining Inc. owns 80% of U.S. Gold Mining, stock ticker USGO, and 12.7% of Gold Royalty Corp, stock ticker GROY. 9.9 million shares of USGO equals 106 million. USGO is advancing the Whistler Gold Copper Project in Alaska. 21.5 million shares of GROY valued at $28 million. GROY is a gold-focused royalty company, generating reoccurring revenue, cash about $11 million, no debt, providing financial flexibility. Industry leaders at the helm, Amir Adnani, co-chairman and founder, built Uranium Energy Corp into a major uranium producer. David Garofalo, co-chairman, former CEO of Gold Corp, which merged with Newmont in a multi-billion-dollar deal. This video is sponsored by Gold Mining Inc., stock ticker GLDG. But don't just take my word for it. Check out the details with the link below this video and decide for yourself. Many say that these bills will, eventually become due and, it's going to be a problem for these tenants. I don't think so. I believe that it's going to be very hard to collect and force a tenant to pay that back rent. I think when you look at the cost to pursue a tenant, you're talking $300-400 an hour for an attorney. Think about the backlog. You're going to spend what, $10,000, $20,000, $30,000 in legal fees, and then you're going to get to court and you're going to stand in front of a jury of the tenant's peers in what, Stanley Moss Courthouse in downtown LA, fighting your case. If you're a landlord, you're probably going to be the most disliked person in that room. So would you gamble $20,000 or $30,000 worth of expenses for the chance to get a judgment for $40,000, $50,000, $60,000? And even if you got the judgment, the odds of you collecting are very slim. Odds are you wouldn't do that. You would just take the loss. I think that's what a lot of landlords are going to be doing in LA. come next year if it doesn't get extended to the following year. Right now, the median rent in LA is $2,057, making it the most expensive city in all of America. To afford the median home in America, a $433,000 home, you have to make $166,000. Average home in LA County, you're probably somewhere around $800,000 to $850,000. You have to make $300,000 a year to buy that property, and you wouldn't be taking vacations. You'd be house poor, making $300,000 a year buying an $800,000 house in LA, have to pay in 52% state, federal, and city tax. So it's a really expensive place to live. And with this moratorium in place, I know that a lot of tenants are going to say, look, I've been impacted. I've been impacted here. I can't pay rent. I'll deal with the landlord when I can deal with the landlord. Just for context, across America, 59% of Americans cannot cover a $1,000 expense. So when you have a high cost of living, a very low savings rate, and a local government saying you don't have to pay, what will most people do? What will many people do? What will some people do? Well, they'll opt in to saving the money. And when people can't keep up, these landlords cannot keep up in LA, what will happen? They will be forced to sell, and I think savvy investors will step in and acquire their assets for very discounted prices. I don't think it's going to happen right away. I think we're going to see maybe late 2025, early 2026, see more and more pressure in the economy build up. And then I think we're just going to see a lot of these landlords throwing in the towel, throwing the keys, saying, look, I can't do this. I have to sell. And I think at that point, we're going to see a pretty big consolidation of property. And as that consolidation starts to unfold, it's going to be a lot harder for a lot of tenants to eventually become property owners and investors when there's just so much capital out there chasing that distress. In addition, a lot of lenders are going to be very careful about lending on multifamily real estate in LA, given its history, on top of rising insurance costs, not knowing what the cost to service and operate this property will be in the next 3, 5, and 10 years. Even Jerome Powell himself said it's going to be nearly impossible to get a mortgage in some parts of the country because of what's unfolding right now with these disasters. What does this mean for the future of housing in Los Angeles? I believe Los Angeles is a beautiful, beautiful city. And I think it offers a lot of great things. The big problem with LA right now is the direction that it's being driven into. It's being driven the wrong way. I think we're going to see a lot more capital flight. I think we're going to see a lot of problems in the short term. I hope we don't. I really hope we don't. But it's looking like that is going to be the case. And if it is, we're going to see a lot of really great people being forced to leave, and it's going to push a lot of people into the unemployment line. It's going to push people to become dependent on the government versus having their own ability to provide for themselves and their family, being able to get ahead. It's going to get harder and harder in California if the politicians running it are forcing the money out of the state. Now, I hope this doesn't happen, but so far it looks like that is the direction.